POV. You wake up on a normal Tuesday morning. You check your banking app before coffee, like you always do, and your entire life savings is gone. Not stolen, not hacked. Gone, because your bank simply stopped existing overnight. This isn't a hypothetical. This happened to an entire country. Iceland is small. Around 300,000 people, fewer than a lot of single cities. For most of its history, its economy ran on two things: fish and geothermal heat pulled from beneath the ground. Simple, self-contained, unremarkable, by design. In the early 2000s, three Icelandic banks, Kaupthing, Landsbanki, and Glitnir, decided that wasn't enough. They wanted to become international players, so they started borrowing aggressively. Within a few years, these three banks alone held assets close to 10 times the size of Iceland's entire economy. Picture a single person owing 10 times more than they'll earn across their entire working life, and still getting approved for another loan. That was the entire country, resting on three banks. For ordinary Icelanders, it felt like a boom. New cars, renovated homes, foreign holidays. For a stretch of years, Iceland had one of the highest average incomes anywhere on Earth. It wasn't an illusion to the people living it. The money was real. It was just borrowed. One of the banks, Landsbanki, launched an online savings brand called Icesave. It was marketed directly to everyday savers in Britain and the Netherlands. Higher interest rates than any local bank could offer. Retirees, local charities, even a few UK police departments and city councils parked public money there, chasing the better return. Hundreds of thousands of ordinary accounts, all flowing into one small foreign bank. The entire thing depended on one assumption holding forever, that these banks could always borrow a little more to cover what they already owed. Then, thousands of miles away, in New York, one investment bank called Lehman Brothers collapsed. It sounds distant. It wasn't. Global lending froze almost overnight because banks everywhere stopped trusting each other with short-term loans. And Iceland's banks, which depended entirely on constantly borrowing fresh money to cover old debts, suddenly found no one willing to lend them any. In finance, that's called a liquidity crisis. When you're not necessarily broke, you just can't get cash fast enough to cover what's due right now. For most companies, that's a bad month. For a bank this size, it's fatal. Iceland's government rushed through emergency legislation, trying to take control, before the banks dragged the whole country down with them. But the banks were already too large to rescue. Bailing them out would have cost more than Iceland could ever raise. Within a single week, not months, a week, all three major banks collapsed, one after another. It remains one of the largest banking failures, relative to the size of an economy. In modern history, the króna, Iceland's currency, lost more than half its value almost immediately. The stock market fell over 90%, and regular people who had done nothing riskier than keep a paycheck in a bank account woke up to frozen savings, a crushed currency, and in many cases, a job that no longer existed. Overseas, it was just as sudden. Hundreds of thousands of ordinary Icesave savers in Britain and the Netherlands discovered their accounts were frozen. Their money was sitting inside a bank that no longer functioned, backed by a government that couldn't cover it. Here's the part almost nobody expects: to freeze Landsbanki's remaining UK assets and protect British depositors. The UK government invoked anti-terrorism legislation, a law written for freezing the assets of terrorist organizations, and used it against Iceland, a NATO ally. Iceland's government called it a betrayal. For a brief moment, one of the smallest, most peaceful countries in Europe found itself legally categorized alongside terror groups, purely as a financial maneuver. Icelanders didn't stay quiet. They gathered outside Parliament, banging pots and pans in protest, a movement that became known as the kitchenware revolution. It kept building until the government fell. Within months, new elections were called. And unlike almost every other country hit by the 2008 crisis, Iceland chose not to bail its banks out. It let them fail completely and prosecuted the bankers responsible. Dozens were convicted, including senior executives. It took years to recover. Unemployment spiked, prices rose sharply, and an entire generation felt the aftershock. But Iceland rebuilt on a smaller, steadier foundation: tourism, fishing, and energy. instead of borrowed money, chasing borrowed money. Today, Iceland's economy is unrecognizable from 2008. Smaller ambitions, stronger footing. So the next time your banking app takes a few extra seconds to load, remember, somewhere that exact fear became real for an entire country, not from a hack, not from some elaborate scandal, just from a system that convinced everyone it could grow forever until it couldn't. It happened once. Nothing says it can't happen again.